As well, my next guest on the show today is someone who has compared investing and planting. He believes that investing is akin to planting a tree and watching it grow. We cannot uproot it every few days or few quarters to check if it is growing. And that quote is an original quote of Ravi Dharamshi, who is my next guest. Ravi, fantastic to have you back and thank you for joining us. If you're comparing trees like planting, well, there is a problem of bad monsoon and there is a problem of unseasonal rains.
Thank you, Nikunj, for having me on the show, and congratulations to you guys on your 6th year anniversary.
Thank you so much.
And yeah, coming back to planting trees, and I'm glad God is kind to us. I mean, I waded through a lot of water to come here, so I guess God is out there to prove IMD wrong. So,
is this a big relief? Do you think markets were really nervous about monsoon, because historical data has indicated there is no one-on-one correlation between monsoon and markets?
So there will always be worries, and monsoon is something that we really like to obsess about. Having said that, this time around even RBI made a reference to that factor, and if government hasn't hiked the MSP too much and monsoon is good, I guess it gives them a little bit more leeway in cutting rates. So that is rates going down is definitely an important factor in the sustaining of this bull market.
I just want to come back to your quote. Is this the time to sow the seeds and plant your trees, or do you think the market would get better opportunities? Do you even try and time the market? You know, just this morning we were chatting as to how Aberdeen has come back into the markets. They feel China has gone up a fair bit, and this is the right time when you should put money into India. So is this the right opportunity?
Yeah, so I'll go back to, I don't remember who said this quote, but the right time to plant tree was 20 years ago, and the next best time is today. So we'll never
we
be...
were little babies then. We didn't know anything.
So like March 2009 was the time when one should have sold their house and bought everything. But does that mean you do not invest at this point of time? No. India is still a $1.5 trillion economy going to $4 trillion economy over a 6-7 year period. We can debate whether we are going to grow at 6% or 8% or 10%. There is no doubt that we are going to go there. It's a question of how fast and what trajectory we take. Given that, having said that, so there is a lot of value and wealth going to be created between, various sectors. If infrastructure is a bane at this point of time, consumption will pick up. Within consumption, if lever is expensive, something else that one can look at. So I believe there will always be opportunity, and it is a good time to be invested in equity markets. In fact, real estate at the other point is not going to have a very good time from next 5-7 year point of view. So all the more reasons that the flow will be to the financial savings, and equities will get disproportionate.
Let's talk about the next 1 year though. Is the ride going to be as good as how the last year was?
So in my opinion, we are in middle overs. The field restrictions are gone. So there are no easy...
Ravi, don't bring cricket.
Don't understand.
India lost to Bangladesh.
I know.
Don't bring cricket.
But I'll tell you...
I never watch cricket, that's why. You never know what's happening.
But you have to...
With markets you can predict, with crickets you can never predict.
But you have to be like my son. You know, when Virat Kohli got out on 1, he said he was just short of 99 runs on hitting a century.
He's an over-enthusiastic,
You have to be
optimistic
positive
guy.
when you are an investor in equity markets.
Right.
Finally, it's an act of faith,
Okay.
for sure. So we are in the middle overs. Easy pickings are gone for sure. But that doesn't mean that there are no pickings at all.
So just for the benefit of our viewers, then Neeraj, Aisha, let's look at some of the past trends or some of the past good work Ravi and his team have done in the past. They were the first movers and they identified the farm opportunity not in 2010 or 2012. That's the time the crowd came in. It was in 2002. CRAMS, the word was coined in 2002 by the firm. They were early movers in 2003, and I personally reported on that. In 2003, they were first ones to identify the capex cycle, which means in 2003 they bought into the infra company, the engineering companies, and then real estate in 2005. As a sector was as identified by that firm. We look at those graphics. Now, Ravi, what we've spoken so far is all past. What I want to understand from you is future. There are no prizes for guessing what has happened in the past. Money is to be made if you look at future. Where is the future looking bright? What are your big ideas?
So I keep hearing a lot that the quality is very expensive, quality is very expensive. But if I take you 5 years back, nobody was saying Page Industries is quality, Aisha Motors is quality, or Astral Poly is quality. Today everybody says it is quality. So the perceptions change when companies deliver consistent growth over a period of time. The challenge is to identify those sectors at this point of time, those companies within those sectors that have product, competitive edge, and a strong balance sheet to support the growth. I can give you a couple of examples, like I believe textile is one sector that is picking up. Today, the perception is that this has been a value-destroying sector. Which are the winners? I mean, I will not get into that, but I'll just give you a brief top-down on this.
Lovely.
India is the only country that has invested in spinning capacity in a major way over the last 10-12 years, thanks to tough. China is curtailing on pollution, curtailing. It is also at a disadvantage because of rupee-yuan movement. Rupee has depreciated while yuan has appreciated. Bangladesh is actually only a converter. They don't have an ecosystem to support the garmenting. India has the ecosystem. We are the largest producer of cotton in the world. We have the largest spinning capacity. And now there are guys, those who are willing to take that export opportunity in their respective niche segments. So today, even though you might have the perception that textile is no. 5 years down the line, people might be talking differently, because this sector can sustain 15% plus growth over a period of time.
But the follow-up question that I have is that, and I don't want you to get into stocks if you don't want to, but within textiles, it's a large gamut of stocks. There are these spinning companies, the Wellspins, Irwins, Tridents of the world. There are companies like Page, which are making products or distributing them. Kitex Garments has come up a long way. And then there are some of the other intimate companies as well. There are small names that I keep on hearing, value investors getting into an Ashapura Intimate, so on and so forth, etc. Which side in the textile business do you see growth being sustained for the next 5 to 10 years?
So our inclination at this point of time is more towards exporters, more towards made-up, value-added garmenting.
Okay.
More towards, it is not towards the spinners or weaving. That is not what we are looking at. See, that we are 5% of the global trade, and I think that's a big skew. Europe, we are hardly a player to contend with. Of course, it's not a level playing field. So an FTA with EU will actually level playing field out, and it will open up a huge opportunity on the European side as well, which is actually bigger than the US market. So given that, I mean, guys, those who can stand their own, regardless of what policy changes happen, are the ones we prefer.
Okay, let's look at the current thematic calls. You mentioned textile. I'm going to bring up that graphic which talks about some of the other themes, Ravi is bullish on. They like private banks over PSU banks, and they are of the view that PSU banks will continue to grow at the cost of, private banks will continue to grow at the cost of PSU banks. And then graduation of Indian pharma to complex generics. You believe that Indian pharma companies will go higher up the value chain. They will no longer be just an API company who's making bulk drug. So before we discuss pharma, let's understand your core thesis behind buying into Aurobindo Pharma and Natco. My compliments first. I mean, you've really helped our viewers because these stocks have just multiplied in last 3 years.
Okay, without going into the stocks, actually there's a good parallel in pharma vis-a-vis textile. So government had this policy of tough, which helped capacity creation. In India, we did not follow the patent regime, which gave birth to thousands and thousands of API and bulk drug manufacturers. This is a good thing because we have a base now. I mean, there is no other parallel country in the world besides China which has such a strong base of companies going into bulk drugs and APIs. Now, the problem and the challenge is always graduating to the next level. So in US, for example, if I take US market, is about $50 billion generic market, and India has about 10% market share. But of the incremental launches and the incremental filings, India has a 25% market share. So this 10% market share, the $50 billion is going to go to $80 billion over next 3-year period, 4-year period, and India's market share is going to go from 10% to closer to 18-20%. So if that is the case, obviously, I mean, this is a sector that is going to grow at 15-20% kind of a growth. You still have to identify the winners within that. It's just a happy hunting ground for choosing your stocks. I'm not saying that every company is going to do well. There are challenges. US FDA is a big challenge. At the same time, it is an opportunity. If it is a challenge for Johnson & Johnson, Sun Pharma benefits in Doxil. If it is a challenge for Sun or Dr. Reddy, Alembic and Torrent are benefiting in Abilify. So the point is the pie is growing. It is going to be shared by fewer people, and India is going to get a bigger market share in that.
So give us a hint. Do we stick by with the leaders of last year when it comes to pharma, or do you look for newer names?
I will not get inside the names, but I believe you have to look for opportunities where there is a difference between perception and reality if you want to make really large size returns.
Can you give me a thesis of why you bought into Aurobindo or Natco? Again, we are not discussing buy or sell here. I respect your compliance, but the thesis, the size of the opportunity. I mean, why has Natco been such a brilliant story? What is so great about the areas they represent? Can you give me the big picture about the companies and the businesses they represent?
So incidentally, yesterday only Momenta got approval for Copaxone. They won the case in the federal circuit. So the first Copaxone has been launched, first generic Copaxone. Natco Mylan they are actually losing out. And now the clock has started ticking. With how soon they are able to launch will determine how much they are able to capture the opportunity. But coming back to your question on why Natco. So we looked at the portfolio. See, it was a small company 5-7 years back, and from that point on, you cannot fault them for having a strategy that you are targeting only the big molecules, and if you don't get this, then you will not, your numbers are going to be lumpy. So be it. You are a small company. What do? You have to make a choice. Either you're going to have a basket approach, or you're going to have a very drug-specific approach. That is what Natco is going with. I believe their pipeline is one of the best in terms of the potential. That doesn't mean all the potential has to materialize. There will be some hits and misses along the way. But if you have gotten at a decent valuation, there is no point to sell because the valuations are expensive. You should stick around because the company is promising.
So one part of the market is what to buy, but what do you book profits from? Is there anything which is getting toppish where valuations are at the peak and greed is not going to be that good?
So last week I was at in a classroom doing a course on investing, and I was learning from the masters themselves. Okay. So there is a lot to learn. We are always learning. So I have no shame in admitting that we are learning all the time. And I've heard it from the master himself that in his words, you sell when either the promoter goes crazy or the market goes crazy. And if that is not happening in your stock, then if provided that it is the right stock, then stay put.
Okay, so let's look at Ravi and who he thinks are his market mentors, and that has to be Rakesh Jhunjhunwala, the big bull on Dalal Street, and his brother Kalpraj Dharamshi. So what did you learn from the master?
I can't put them in 1 or 2 points. There are a lot of things that I've learned from him. But one thing, 2 things that I would say stand out the most is to have your own opinion. You're not going to make money following somebody. You have to have your own opinion on things. And second is, investing is finally an act of faith, so you have to be an optimist over a longer term period. I mean, you cannot be an eternal optimist. You have to adjust for reality time to time. But still if you are too cynical, you'll be right, but you'll not make money.
So is the market being too cynical on that one basket which is just being hated right now, that is PSU banks? I know you also mentioned that you believe private banks will grow at a cost of the PSU banks, but they have been badgered down so much that the valuation levels have just gone down dramatically. I agree the book is also difficult to call right now, but is it a case of being too cynical, or is this still realistic?
So at some point of time, PSU banks will become a great buy because our government will come and bail it out.
That's the only reason. You don't believe business aspects get you to
What is the history? What is the history telling us? They have destroyed wealth for whatever we have done. Last 10 years, the entire book is gone. They are going to dilute. They're going to need huge recapitalization, which is at half the book or even less than half the book. Is that value accretive? No. So there are some preconditions. Unless they are met, I will not say that the PSU banks are a great investments. They'll be a great trade from time to time.
Please appreciate the reason I'm asking this to you is because there are some 3 or 4 gentlemen in their own right who've come out and said that they would want to buy into PSU banks. So it's always good to get the balancing view.
But fund managers have no choice but to have an exposure to PSU banks. It's a large basket. I have a choice. I don't have to be in there.
But Ravi, if I just look at PSU banks, markets, they just love to hate them, and maybe that's the time to buy. I mean, everybody likes HDFC Bank, everybody owns HDFC Bank, everybody likes IndusInd Bank, and IndusInd Bank is an overtraded crate. My only submission here is that aren't private banks more like an overcrowded trade?
I'll come to private banks later. First on PSU banks. Have they created wealth in the last decade or even decade prior to that? They have not. You need to have a guy who is in charge at the top, who has been given time to perform and incentive to perform. If those things happen, then yes, PSU banks can create wealth and value. But until those things happen, I'm not in a hurry to buy. Now coming to private banks. Since PSU banks are going to be firefighting for the next 2-3 years, it's going to be private banks if and when the growth cycle comes back. They are the guys who are going to be making money out of it. So if I'm not wrong, the current numbers are something like this. Private banks form 18% of system in the banking system, but they are 45% of the profits. Yeah. So, I mean, clearly you know who are the guys making money. I mean, it is a business with tremendous financial leverage. You want to be, the least you can do is be with a prudent lender.
You also like NBFCs, and one stock which has done incredibly well for you, Touchwood, is Bajaj Finance. Do you like urban dominated NBFCs? Do you like rural dominated NBFCs? Why has a stock like Bajaj, or why a business like Bajaj Finance done well? And do you think consumer financing as a business is here to stay? Will that be a mainstay? I mean, every time you buy a mobile phone or a laptop, you go to a Chroma store, you go to a Reliance Digital, the minute you make a purchase, the guy comes up with you with the form, sir, can I finance it for you?
I will not comment on Bajaj Finance specifically, but what I can tell you is how do you choose which NBFC to buy? So the number one point is they should be prudent lenders. They should be adequately capitalized. They should have enough dynamism to move from a product category to a product category and avoid the pitfalls. A downturn is really what tells you who are the prudent lenders. So we can see there are some NBFCs that are suffering at this point of time, like M&M Finance. I'm not saying they are not prudent lenders, but they are going through troubles. And if you have done that, in 2 down cycles, that takes away a little bit from your competency. So if management has shown ability to survive down cycle, that is your biggest hedge against the financial leverage in the business. I mean, that is how you would go about picking.
Britannia and United Spirits, are we reaching the top anywhere close, or you think the ride has just begun for these two?
I don't think the ride has also begun yet. Maybe for Britannia it has, but not for United Spirits. The numbers haven't even started. Right now it's only the Diageo premium that has come in. I mean, the Malya discount that has gone out, I would say, in Diageo. But the drinking culture in India, the social drinking culture, will only pick up. We are a young country. And if you look at any major penetration numbers in the world, I mean, we'll be the largest drinker of whiskey, wine, even the white spirits in the world, and the trend is towards premiumization. So, and this is a very, very difficult business to replicate. I will not comment on if this is a good time to buy or no, but this is a business that will do very well over a 10-year period, and you can sleep on it. You don't need to be worried about some state government banning it or any such thing. I mean, the state with the ban is one of the largest consumer of alcohol in the country. So
I just have one small question to that. The low market segment is catered by a lot of regional players, and the high market segment, which United Spirits might be catering to, has a natural competition in terms of large outbound tourists who essentially go out, and when they are coming back,
that's you, Neeraj. That's you.
No, there's a large number of aspirational travelers who probably want to do that.
That's you.
So my question is,
I don't disagree with you.
Isn't that
you're only allowed to get 2 bottles, my friend?
Yeah, but which is my question: is that a concern, or you think it's just too small a number to make a dent on the product profile for United Spirits?
No, it's too small a number. It's too small a number. I mean, you will probably get it and keep it in your home, but you're not going to take it to a party and pour it, right?
Looks like you party hard. Okay. So a year from now, hypothetically, if we are interacting on the same forum, 7th anniversary, I'm sure we would be interacting. Where do you think the markets would be?
I wish I knew.
No, I'm not looking at level, but in terms of a cycle, in terms of a theme, We're not getting into whether Nifty would be 9,000 or 10,000. It's difficult to predict. But what kind of scenario do you think we could be staring at?
The scenario, I think there is some more pain in the economy before it gets better. Whether it lasts 2 quarters or 4 quarters is anybody's guess. And
will that pain reflect in the market also? Or is it done with now?
At index level, it might reflect by consolidation. But I believe there are stock-specific opportunities even right at this point of time. And one should not be looking at index while investing.
Okay, I'm going to look at some of the books which Ravi has always endorsed, and his all-time favorite book is actually Reminiscences of Stock Operator. He's currently reading a very interesting book called Business Adventures, and he's got a book recommendation even for beginners, One Upon Wall Street. I mean, it's one of my personal favorites, and I quite enjoyed reading that book in early part of my career. One of those classics, I guess. Right?
Yeah, it's just common sense. It tells you to be alert, look around. I mean, an idea can come from anywhere. So it appeals to a beginner, and you can understand it. You don't. If you start with an intelligent investor or security analysis, you will be you'll be disappointed and you'll move away from the field.
Well, why were we discussing book, Aisha?
We're discussing books because books it'll be after this very quick break as well. Amish Tripathi, one of our fictional favorite writers, is going to be joining us, and he's launched his new book, which is Scion of Ishkwaku, and we're going to be discussing that in greater detail in just minutes from now with Amish Tripathi.
But for all our business friends, I think Ravi Dharamshi's recommendations are well taken. This is coming up, but do watch out for Business Adventures and do watch out for Reminiscences of a Stock Operator. Those are his all-time favorites and the current reading books that Ravi is doing. Ravi, so good having you and in our studios. Thanks for taking the time out and being with us and sharing your thoughts.
Thanks.
I loved your quote, by the way. Investing is like planting. When will the fruits come?
One day they will come and you won't even realize. I mean, if you really wait for the fruits, that's the point. One should not wait for the fruits and just keep seeding it, keep feeding it. And one day the tree will be so large that you'll be surprised.
Inshallah, as they say. Thanks a lot for that, Ravi. Really good hanging in our studios. Okay, I think let's take that break. Up next, we talk more about books with Amish Tripathi.